Well guys, one of our favorites right here on this channel, seems like it has its tentacles into everything, is giving us incredible profits, and oh by the way, is still trading at a cheap valuation relative to its history. But Wall Street is starting to come around to this stock and seeing exactly what we've been seeing for years now right here on this channel. So let's discuss that. Let's discuss exactly what they're seeing, separate what's true, what's not true from all that, and get you guys an answer on that. And let's just see exactly what Wall Street's saying. Just make sure you like the video if you like getting the truth off the hype, because that's exactly what you're going to get today, guys. And if you're ready to stop following these Wall Street idiots and take your investing seriously and learn how to do it, make sure you check out the pinned comment down there for the summer sale that is going on right now. We'll talk more about it at the end, but it's the pinned comment. All right, you guys know Wall Street. You guys know that they're always late to the party, but they might be coming around to this one. So let's discuss it. Let's separate the truth from the hype, from the fact, from the fiction, and get you guys an answer on, is this stock still a great deal or not? That to me is the bottom line with all this. I don't care whether Wall Street's wanting it, Wall Street doesn't want it, who freaking cares? That's the bottom line with that. But let's see what they got to say.
It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of Likefolio. Welcome back to the show, Andy.
Thank you.
All right. So happy Monday to you. And Amazon having a nice rebound here from those lows that we saw in April, like every other stock, it seems like. But what kind of data are you guys seeing on this front? Because it seems like the number of areas where Amazon grows revenue continues to expand as they grow, you know, not only their cloud business, but now it's advertising, it's the Prime membership, it's everything, right?
Yeah, it's everything Amazon does works really well. That's an exaggeration. I don't know about the grocery business that they got into, but everything they do digitally seems to work. They have enormous distribution. They have exceptional ability to execute against a plan over multiple years. And
so right there, right off the bat, none of that stuff's new. We've known that these were growing, that they were involved in them, and they come from a long time. And notice the way he says, wow, it seems like they kind of execute on a plan over years. Yeah, that's what a great management team does. Now, that's not what Wall Street wants to see, right? They want to see hot news this quarter, this day, so that way they can trade the news and play all these games and run stocks up to reasonable, unreasonable valuations and then, pump them and dump them and do all the other crazy games that Wall Street does. That's what they want. They might look ahead to the next quarter, maybe, 6 months to a year out, in a long-term scenario to Wall Street, but for us as long-term buy and hold investors, our advantage, our massive advantage is time. We don't have to take profits in order to increase our bonuses. We don't have shareholders we got to answer to. So I'm okay with, Amazon staying beaten down for multiple years or Palantir staying beaten down for 2, 3, 4 years, picking up a bunch of cheap shares before it goes on an epic run like it has. All those sort of things like that. They don't advantage Wall Street. They're advantage to us. Our advantage is simply to ignore that short-term stuff and go, yeah, dummy, I want a stock and a company that plans multi-years and executes and tries to get it right over multi-years, not rush it to market to try to peak up earnings next quarter and then struggle for the next 5 years. That's Wall Street's game. That's not our game as long-term buy and hold investors. That's why I love Amazon. That's why I've loved Amazon for the longest time, because that is what they do. They make Wall Street mad for 3, 4, 5 years, and then magically, like we're seeing right now with Amazon, all these revenue generators are driving and they're high level and they're doing very, very well. And Wall Street's like, oh, look at that. Oh, where did that come from? And it's like, those of us that have been paying attention and listening to earnings calls and everything else for the past few years, it's all been in the works for a very long time.
Really seeing that play out in the advertising space. I don't think many people know that Amazon is actually the third largest digital advertiser in the world behind Meta and Google. And it's gaining really, really fast, because what Amazon is doing is not just selling products anymore. They're now selling influence, and that influence delivers a high ROI to its advertisers because, shocker, people on Amazon that are searching for products are searching for something to buy on Amazon, and they're going to pull the trigger really quickly. It's really easy to see the direct impact on and return on investment that these companies and advertisers are getting. So they're in prime position to really take advantage of a growing space and steal market share from Google over and over again. And we see that continuing well into the future. The other thing that...
yeah, we're not seeing that in the data, first off. Secondarily, I think you're talking two different things there. When you're already on Amazon to shop, you're already shopping for stuff anyways. Google's not getting that revenue regardless. Google's not getting that customer regardless in terms of clicking through their ad in order to jump over to Amazon and then buy. So it's not a apples to apples comparison, where I do feel like when you're doing, maybe Google versus Microsoft, for example, that is much more of an apples to apples comparison here. Marketing is just not this zero sum game and just, oh, they chose Amazon instead of Google. Not how it works. If I'm on Amazon looking for something to buy, I didn't Google it first. I'm typically going to, pulling up the Amazon app and punching right there in their search bar, which, by the way, their search bar sucks compared to Google. Just in case you've ever tried to search for anything, it's getting better, but Amazon is light years behind Google in terms of just presenting and giving you what you want right there in front of you, much less ads that I want and everything else of that nature. So in terms of it within the Amazon ecosystem, does it make perfect sense? Of course it does. Absolutely. In terms of as you're scrolling through results, you see the sponsored results right there at the top, basically getting bang for your buck right there. Yes. But in terms of organic results, which is very, very different, no, Amazon doesn't hold a candle to Meta or Google in that particular instance. Those are two separate things altogether. Make sure you kind of keep that in mind as you start hearing narratives going around. This is the same rinse repeat game that we hear, that we actually heard against Amazon just a few years ago as well. Somehow Amazon was dying and wasn't growing. And that's not what earnings said. But nonetheless, don't let the truth get in the way of a good narrative per se for Wall Street.
Amazon has going for it is its Prime Video. Their reach here is up 40% year over year. Consumers are just flocking to the Prime Video library. They love it. This gives Amazon another angle to advertise to people, to expand the value of the Prime membership, to keep people hooked on that. And so everything we see from Amazon in all of these different, I guess you could call them verticals, is extraordinary. And this is a company that you just simply can't bet against. In fact, this is one of the few, investments that at Likefolio we have put the infinite hold stamp on, because they're just going to keep winning. They have the DNA in their company to keep winning. They have a huge vision, and they execute against it really, really well. So all signs are green for Amazon here.
Yeah, I don't know any prudent investor who hasn't had just a green sign on Amazon forever. Yeah, a hold, whatever the heck you want to call it there. Every time it's undervalued, I'm buying Amazon. Have been for a really, really long time. I see no reason not to continue that in the future unless they magically start running the business completely different than how they have for the past 20 years. Otherwise, the proof is in the pudding, the proof is in the earnings, the proof is in everything. Sorry, I just don't think people are going to, buy less stuff on Amazon later on. They're not. I don't think AWS is going to get smaller in the future. It's not. It's going to continue to grow. Everything is going to continue to grow as the economy expands, as the world expands, as everything expands. Amazon's going to take a larger and larger slice in that. And there's still a lot of physical business for Amazon to take away from. There's still a lot more to go. Almost every single vertical that Amazon's involved in is about disrupting a legacy business. And I'm not talking legacy business like a business that's been around 20 years from now. I'm talking about legacy businesses that have been around for 100 years. They're disrupting those types of businesses, which of course are the easiest ones to disrupt. That's kind of the first piece. Second piece is there's massive growth and massive TAM to go after in every single vertical they go after, meaning they don't have to win. AWS doesn't have to be the best in order for them to make massive profits for decades into the future for us as shareholders. Same exact thing with, Prime, same exact thing, or Prime Video, same exact thing with pharmacy, same exact thing with advertising. Everything that they get involved with, the TAM is so massive, they can be second place, third place, fourth place, fifth place, or first place, and they're going to make a killing for us as shareholders. That whole zero-sum game, we talked about it before, absolute trash, silliest thing I've ever heard in a long, long time. But yet, Wall Street likes to push that narrative sometimes to, get you out of one play and get you into another play. Again, they're trading their book online. Kind of tells you exactly when they're on here talking to us, that's what they're doing. So ignore that sort of stuff. But that's why, for me, Amazon is on that, eternal buy, whatever the heck you want to call it, hold it and continue to buy it, because unless that actual how they run the business changes, and there's no indication they're going to change that in any way, shape, or form, heck, it's a wonderful business, an incredible business that's going to continue to grow well into the future, and they're going to execute on a high level, more importantly, well into the future.
Andy, despite the size of this company, they continue to work towards getting leaner. right, with robotics and different ways to make and to regionalize their delivery systems to make it more efficient. And I think this Roku deal is something. I mean, Roku's up 8.5% on this deal. Amazon is up, up, but not as much as Roku. This is Roku stats. Half of they're pooling their addressable audiences is what Roku and Amazon's doing here, and I think it's pretty significant. Half of all streaming TV is done through a Roku. So, this partnership of two strong companies, it seems to me like there's nothing but positive here. And for Amazon, that's in AI and they're in cloud and they're doing all these things. You're right. Every business they're in, they're good at. Right. And they keep getting better at it as time goes on. But this stock, Andy.
Yes, they're good at it because they take years to perfect it, years to make it right. And when they can't figure something out, they move on and they don't make it a big deal. That's why they're so good, though, is because they take their time. They go, hey, yeah, let's get out there. Let's make some mistakes. Let's grow this thing the right way, not the let's do it as fast as possible so we can juice our bonuses this year. No, they're doing it the right way, taking the long-term approach, testing, retesting, vamping, revamping. Hey, this would be a lot better if we had this, this robot or, this particular, service, whatever the case is there. And they go out and they do it and they take their time and they do it right. Sometimes through partnerships like they're talking about right here, sometimes through acquiring another business quietly. Usually they don't try to make a big deal out of all that sort of stuff. Or sometimes they develop it in-house with the appropriate testing, with the appropriate measures in place to make sure that they're doing it right and what's best for the business. That's just called executing on a very high level and not worrying about what Wall Street or anybody else thinks.
It sold off from $240 to below $200. So it's not even anywhere near its recent highs. So is the good news that you see, and your charts that you brought us today are incredibly strong, big numbers on both of them. So is that what you guys are seeing? Just all systems go, and dips should be bought in this name?
Yeah, dips should be bought on Amazon until you run out of money or you run out of dips.
Or if it happens to be overvalued, that's the other time to kind of not buy the dip per se and make sure you're being prudent with that, because although Amazon always trades richly, and that's one of the hard parts about dealing with Amazon is the fact that it does trade so richly, it still doesn't mean that it hasn't had times where it has been, despite typically trading at a rich valuation, where it's been significantly overvalued from that rich valuation there. That's definitely when I personally would lay off from buying Amazon. But when Amazon is at a fair value, or like it is right now, undervalued, you can make a case for it, maybe not be, but I mean, I can look at it historically. It's still trading at a very cheap valuation compared to its history. That's a buy. I won't disagree there at all.
Thing you see from an execution standpoint, all of these charts that we bring up, whether it's Prime Video, whether it's advertising revenue, whether it's AWS, actual digital sales through their channels, they all look like what every entrepreneur projects that their company will do when they pitch to a VC. It's just up and to the right and steady and hockey stick growth. And for Amazon to pull that off at the size that it is, tells us just how committed to efficiency, how committed to domination that this company is. It came out of Jeff Bezos's initial vision. And although he's not day-to-day operations with the company, his fingerprints are all over this, and it was set up, and this company was set up to win for a very, very, very long time. And I think they're going to continue doing that. We see it in our data. We see it in the stock price over and over again. Just not a company to bet against.
Yeah, that seems to be the theme here. Andy, when you look at the different segments of their business, you mentioned the advertising segment starting to grow even more and at a faster pace. That's almost pure margins at this point. Are there any other areas that you guys are seeing as far as your data goes that might be the next big thing for this company moving forward?
Well, I think Kevin hit on the Roku partnership is a real game changer. I think earlier results are showing that they're getting 40% more reach with the same budget and showing 30% less duplicate ads. And so what that is they're able to deliver a far greater impact to their advertisers, which are growing, basically overnight. And so both of these companies are winners out of this partnership. I think the stocks are reflecting that, really clearly. And I do think that that's the next big thing for Amazon because, Google, I think, is in a little bit of trouble here. People are starting to realize it. Chat GPT and these others are taking away a lot of search volume. And
that is factually not true. So again, more of the Wall Street narrative taking over. I don't know. Search grew 10% last quarter. Grew 10%, despite the fact it's the dominant force. So I don't know how you can take away from something when it has positive growth, double-digit positive growth. Does it mean you can't grow? Does it mean that ChatGPT can't grow and everybody else of that nature that's out there doing that? But I don't know how you can be taken away and still grow 10%. That math doesn't math to me, right? If all of a sudden if I got, $10,000 and then my account goes up to $11,000, nobody took anything from me. My account grew. Just basic math there. If the pie is this big, and that's what they're implying with these type statements, is that the pie is only that big, and my share of that pie got bigger. It grew by 10%. Nobody took anything from me. So that's categorically false. This is just more of that Wall Street sort of stuff. Matter of fact, we heard the same exact argument that everybody was catching up to Amazon just a few years ago. That's why it was trading down in the $80 range or so. It was, oh man, Walmart's starting to launch their delivery service, and all these other people were going to disrupt Amazon. Where are we at now? Not true at all. Matter of fact, the data didn't show that. More importantly, that's why we were busy buying up shares like crazy in the $80 range. It was like, this is just dumb. Same exact thing with Meta, right? Oh, social media is dead. Oh, they're dead. Their advertising's dead. Zuck doesn't know what he's doing. He's lost his mind. All that sort of stuff like that. Same exact thing. 100% not true. It's not what we were seeing in earnings, which is the important part right there. That's why I tell you guys, don't listen to Wall Street. Don't listen to myself. Ignore all of us. Go listen to those earnings. Go look at the actual data and the earnings. That is the only place you will find the truth. I try to bring you guys the truth without the hype. I absolutely do. But it doesn't mean I'm not always right. Doesn't mean I don't, interpret data wrong. It doesn't mean that I don't have my own biases too, because sometimes I do. It's impossible to avoid. But the truth is in the earnings, and that's categorically false. And, just silly stuff. He wants to pump up all Amazon. Great. Hey, guess what? I'm going to own both. There's going to be multiple winners, 5, 10 plus winners in advertising, online advertising. Same exact thing with AI and everything else. There's going to be hundreds of winners in AI over the time frame there. There's no reason why Amazon and Google and, ChatGPT and everybody else can all win and not have to take from each other. It's just silliness.
Once those advertisers start to see that Google is unable to deliver the audience and the metrics that they once were, and that there's other places to put these ad dollars, Amazon is a natural beneficiary of that because,
again, it's another hilarious take. Once people figure out where's he getting his data from, 1, 2, there's most ad spend is still traditional ad spend, meaning Amazon, I don't think, is taking away from Google's ad spend, considering Google and Meta are 1 and 1A. And everybody agrees with that actually buys online advertising. It's Google and Meta, and everybody else, to include Amazon, is a far, far distant second below that. So that's first piece. So what he's saying is false and just his opinion and his opinion only, not supported by data. 2, all that traditional advertising is where Google and Meta are taking from. They're not taking from each other. They're not taking away from Amazon. They're taking from traditional media, which, by the way, there's still a lot of folks that like to pour, millions upon millions and billions upon billions of dollars into traditional advertising, despite the fact you get way more bang for your buck on Google and Meta and everything else, but they believe in the traditional way, to include print, if you can believe that. Advertising on network TV, giant waste of time, giant waste of your money. Every single data point says that, but there's still folks out there, and more importantly, in that C-suite level, that approve the spending, that just don't think online advertising is where it's at. This internet thing's a fad, whatever the heck they think. I don't know. I don't care. So to me, Amazon is not taking away from Google at all. They're taking away from legacy media, and more importantly, very, very niche within legacy media in regards to products specifically on Amazon. So you got to have your product on Amazon. Otherwise, why the heck would you advertise on Amazon? It makes no sense. You're not getting any bang for your buck at that particular stage. So there's a lot of this sort of stuff like that just you got to look a little deeper. This is where critical thinking is involved. And of course, like we said, you got to ignore the noise.
And they can show that ROI immediately. And when they're expanding their reach through these types of partnerships, that's just a really big deal. And I think the market will take some time to absorb it, but the early indications are this could really accelerate what's already a great vertical for Amazon.
So for me, Amazon's going to win, Google's going to win, Meta's going to win because they're really, really good at it. And he's right, the ROI is calculated. They can show it. And by the way, the ROI still on Meta and Google is far superior to everyone, including Amazon. Now, it doesn't mean Amazon can't win. It's not providing a great ROI. It's just different and it's not there. And even if it gets there one day, again, all three of them can win and print significant dollars to the bottom line. Go to those earnings. That's where you find those answers.
All right, great stuff, great data as always, Andy. Appreciate it.
All right, so we'll go ahead and stop the video right there. So let's talk about Amazon stock specifically, where it's at right now, and is it trading at a cheap valuation? Is it really rich? What the heck is going on with Amazon? Now, to me, based upon my analysis, you can go back and look at any historical metric for valuation on Amazon, and it is trading very cheap right now. Not the cheapest it's been. It was cheaper. Obviously, like they said in April, it was cheaper last year. That's okay. It's not about finding that bottom or hitting that perfect, undervalued price or whatever the case is. It's just about avoiding stupid hype runs and overpaying significantly and just consistently building out your share count in a great company. And yes, despite the nice run that it's been on and the money that we've made, it's still trading historically at a very cheap valuation, and they're executing on a very, very high level like they always do. And like we talk about all the time here on this channel, use a modified DCA or just do a simple DCA, DCA your way into a position in great stocks. That really is the easiest way to execute on all that. But you can't do that if you haven't done your due diligence. You don't understand what you own, because if you don't understand what you own, guys like this will get on there and maybe he's got you pumped up about Amazon, but now he's got you selling a great stock like, oh, I don't know, Palantir a year ago when a lot of folks were negative on Palantir, or, Meta back whenever, 2022, whenever it was beaten down, or any of the other great stocks that seem to lose favor on Wall Street for a period of time, despite having great earnings underneath. It's very easy to ignore all that stupidity when you understand what you own, when you've done your due diligence, when you've done evaluation, which that's exactly what we do in the pinned comment down there for my group, where that summer sale is going on right now and it ends soon, where you get direct access to me anytime you want. You get 5 free courses, you get free coaching. We got the best 6, 7, and 8-figure Discord out there discussing all of this, live Q&As. I release 3, 4, 5 videos a week right there in the group that don't ever make the light of day here on YouTube, just strictly for you guys in there, along with a lot of other posts. Anytime something goes crazy, typically there's not even enough time to put out a video. You just got to basically make a post about it and kind of move forward out there and communicate that accordingly. Of course, you can see my watch list with price targets, see exactly how I execute on a plan. Guys, there's so much involved in the membership. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.